Good morning, good morning. Happy Monday, everyone. What's up, Roman? How you doing? Hope everybody had a good weekend. Morning, folks joining us on YouTube. Let's see what we've got cooking here. Welcome, everyone, to the tradingsyndicate.org. I'm JJ, vwaptrader1 on X. Good to have you with us this morning. And overnight inventory was long. We have now corrected overnight inventory. The volume is still above us. So you can see when we bounced back up to 69.53 and a quarter, there was a seller there. So there's resistance at 69.53 and a quarter right now. And I would say there's support somewhere just under the 69.30. So remember Friday we had kind of a strange day on Friday. We had a massive move up. A lot of people are short under 69.30. And we talked about that level in Globex. That's why it's bid so heavily there. You know, we were down there for a little bit, less here and then not at all here. As the market opens, we're going to look for a move down and see if that overnight low actually holds. Hey Raj, how you doing? So as we open, I'm still looking for a move down because there's still inventory trapped long. We need to find the bid. Now we know the bid is here and here, but that's in Globex. So where, when the market opens and all the larger traders come in, where is the bid going to be? So that's our major point of focus. And today, the one thing I find in these markets, um, these markets have very, very speculative trading. And what that means, folks, is the trading in these markets tends to come undone. Just as fast as it goes up, it comes back. Ah, Uruguay, cool. Welcome. I guess welcome to the room. Now, the problem with this is it's great for speculation, but the thing is you don't want to get too tied to a bias because we are basically back inside yesterday's range, Friday's range, sorry. And the probability that this whole move could come apart, it's happened before. We've seen it. You know, you saw that big liquidation from 70.13 all the way down to 68.84, and then all the way down, and then a look below and fail of, you know, our 67.88. So we are hitting some resistance here. The all-time highs are up here at 70.30, and we're back into this balance zone, which we keep coming back into. Notice here, 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 and we're right back into it. So I'm watching 69.23, which is what is our low today? Our low 69.21 and 69.63 on the upside. Hey, Arkroy, good to see you. All right, how you doing? So we seem to like rotate up, come back into that balance, rotate down, come back into that balance. So let's see if I'm thinking if we break 69.23, then of course this thing will come apart like a cheap suit. But for now, let's find the bid in RTH. And of course, always trade, right, your business setup. Now your setup is how are you going to do business and how are you going to manage your risk. So my balance levels this morning were 69.56 and 3/4 to 62 and 3/4 and double it to 44 and double it again to 20. Now I've put in a new section. If you look on the Discord room where I catalog my trades, it's called JJ Trades. So they don't get lost. This way you guys okay. Um, this one, I put the RTH and the overnight in here. You can go and get rid of the overnight session if you want. But I was just showing that there's quite a bit of back and forth in that purple zone. Hey, Stealth, how you doing? So the trade I took this morning was the fail to look below 69.20. I entered a little late. I went in at 24 on 8. I had my stop just down here. And then I sold a little bit. Where was my first sale? It was... First sale was right here at 69.30. I had an offer out there. I sold one in here, and then I got rid of the rest up at 36, which is right here. Not a bad little trade on 8 contracts. Right. Yeah, nice rejection from VWAP all the way back down. So I think it's going to be a nice trading day, nice back and forth. Hey, Moran, how are you? Yeah, you can see on that trade I took that 3 candles couldn't actually take out 20 and 3/4. Our low was what? 21. So just a tick. You could see they were front running my level, so that's why I decided to get in. You know, the business reason was that the sell orders are done, the market's going to rotate back up. I waited till 24 to let the large traders clear out 20 to 24. Pretty simple. So we are going to open inside Friday's range and inside Friday's cost basis. So we're right at Friday's cost basis here. You have to excuse me if my voice sounds weird. I don't know what the heck's going on with me. And if we accept under 32, you'll be looking for 69.28, which is that low here. That's where the stop is. So let's see if we can get down there if you are short. Yeah, it's very tradable today. Price action is decent, decent overnight range, some good opportunities. Globex was a little quiet. Our session in Globex, everyone was kind of hungover from the Super Bowl. Very quiet in the room. Very quiet in the room. Alrighty. Man, Friday we opened all the way down at 68.56. Yeah, you could tell everybody was up late. Because I'm talking and talking and talking and like nobody's talking. Right? The room is like dead quiet. So like everyone is catatonic. Right? Usually they're, but usually the morning session I have to poke at you guys to kind of wake up a little bit. But it was especially bad this morning. It was like, ugh. Felt like one of those school teachers where everybody was asleep. Hey, Bram, what's up? Oh, yeah, Renee. It was brutal. It was brutal. It's like, oh, I'm just talking to myself. Nobody's listening. uh, like nothing. Crickets. uh. So you can see every time we come close to the cost basis of Friday, that's 69.35, we kind of slow down, right? And that's a direct result of the type of market you're in. You see, that is the cost basis of Friday is here. The market will sell down to it and will kind of stop selling. Here we had a nice sale that put in that overnight low, but that sale attracted buyers. So let's see what happens. I think it's going to be a little choppy when it opens. Let's Sorry, folks. A sneeze crept up on me. Man, I tell you, I had the flu in January, and it has been so hard to get rid of it. Yeah, sure. So the volume profile, right, is very simple, right? So if you look at a move, like say we go to the Globex Open, and you want to see the volume for the whole session, just go to Tools, Draw Volume, and then you just start at the Globex Open and go to Now, and you can clearly see, right? Let me just get rid of these drawings just for a second. So you can see like there's a big chunk of distribution here. And when the market came close to that, well, VWAP is here too. There's going to be some resistance right here, right? Because those are trapped longs and there will be inventory, right? Just like when we got back up here, there was some inventory and we had to clean that out, get to VWAP and come back down. And now we're back down to this high volume area, which is another area of inventory for the night. Does that help? So volume profile is a useful tool when you don't have a TPO chart. Right? It can really help you see where the transactions were. Now, why is that helpful? Because where the transactions were, they'll be there again. Because the thing about volume, folks, is if you're a size seller and you were selling 69.56, when you get back up to 69.56, you'll be a seller there again. And that is what creates resistance. Okay? If you guys actually knew what creates support and what creates resistance, then you could actually reason your way into this business where you'll be able to think clearly, right? I do. I do. Sometimes, Vox, what I'll do is, like, say if a market gaps up, I saw a cost basis here, but it really doesn't matter if you use the, like, say if we had gapped up and we had trended, say we opened here and just kept going, I would use this cost basis from the end of the day yesterday, right? Especially when it goes like this, it trends higher. It's hard to get a cost basis, so you use the previous days. Definitely. Good question. Good question. So Redcom, I hope that helps with your volume profile. The relationship relative to time is the amount of customers coming in the store. It's never the same. Every day business is different, right? Sometimes you get a lot of customers, sometimes you don't. That's what people call order flow. So in trading, there's inventory and order flow. Order flow moves inventory. So if, say, Redcom, you have 1,000 contracts and they're priced at 69.32 to 38, right? Say here you're a dealer and you've got 1,000 contracts here. Well, as the market goes up, you're a seller, right? And you're raising price because you see buyers coming in. Here you hit a wall, the buyers stop coming in, you put it back on sale. So this time frame will be different than yesterday and the day before, the day before. That's why I always just look at the candles, right? The candles will tell you where the sellers are, and then you can manage your expectations. So you can also look at the offers. Look, lower, 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 lower. The offer is going lower. That means the product is being put on sale. Right? You can see there's a fairly aggressive seller now. Remember 69.28 is the next stop lower. Do not be surprised if we take out that overnight low. What's going on in the world? Do we have any news today? Fed speaker, Fed speaker, Fed speaker. Not really. I'm not sure what you mean by legs. You mean the front side of the move and the back side of the move? This is the front side of the move. This is the back side of the move. You'll see, if you're in our room, Redcom, so you'll see that over and over again. It's the same thing. Front side of the move, back side of the move. Front side of the move, back side of the move. And what the business reason is that you run out of buyers here and you just, all the sellers start marking down price to get rid of their inventory, right? Right? Say you bought, say this is a chart of sales of oranges, right? And you bought 100 oranges here, or let's make it 1,000, right? And you sell maybe 600 of them on the way up. Then you have to mark them down, right? So you will sell them back to where you bought them. Does that make sense? Now, if things get really bad, you might have to sell the oranges less than what you bought them for. But that, my friend, is business. Do you understand? You're always looking to the left to see where. Yeah, you're always looking to the left. So if you were up here, you'd see that there was a seller here before. There's a seller here. There's a seller here. So if the market gets back up to these levels, you're going to anticipate resistance there. That's why we always look to the left. And that's why when markets hit brand new highs, it's very, very difficult because there's nothing to the left. There's no references. Good, good, good. No problem. Yeah, see, that's the thing. They don't teach you guys this in regular trading places because unfortunately those people have never made markets, right? And more than making markets, I was a distributor, right? So I was always a seller, right? I was always a seller of size. I always had millions and millions of shares to get rid of, right? Because my clients were the deal people. So cost basis, so if we sell 1 million shares between $5 and $6, and then the stock goes under 5, we have 1 million shares of overhanging supply to clean up. See what I'm talking about? Does that make sense? So if I paid you, George, to bring in some buying, and so George, look, I'll give you, right? You bring in 1 million shares of buying, right? I'll give you 250,000 shares for free. You bring in 1 million shares of buying between 5 and 6. And you're like, yeah, sure, no problem. You go and you bring in that 1 million shares. Now, if that buying is sticky, those people will hold. But, you know, in junior stock markets, the buying's never sticky, so the people never hold. So they puke out. So now I know that I've got to flush out 1 million shares. That is what supply is, right? Does it make sense to think if we get above Friday's close? We could. We gotta, we could definitely. Right? You're seeing bids here, right? Where's Friday's close? It's all the way up here. We could. That is a valid theory, Hex. So now you just got to work that into your trade setup. So cost basis is basically just time and volume traded. Does that make sense? When you trade time and you go sideways, a lot of people are like, oh, that's not doing anything. Yeah, it's doing something. It's building a cost basis, right? But most people don't think in terms of size. Because they haven't traded size. So that's what we try and do. We try and teach you smart money concepts in this room. Right? That's our goal. Is to try and teach you how smart money thinks so you can trade, you know, alongside smart money. That makes sense, right? Okay. The overnight point of control was down, it was up here, and now it's moved. That means accumulation. See? It's all about inventory, my friends. Let's see, Hex. I always get these feelings too, but does the chart, I always have to go and look, does the chart, you know, is the chart backing up my feelings? Right? Sometimes I'm short biased and the thing just rockets straight up. Sometimes I'm long biased and, ooh, a big seller steps in. Hey, that's business. That's why we have to sit and watch, and the chart will tell us, right? Trust the chart, right? Just trust the chart. You know that there's sellers at 37 and change. You know there's sellers at 40. Here we go. Don't be in any rush. Just take it easy. Let the market show you if it can take the lower stops, right? So we're looking down. We're looking for 29.5 and 28, right? There's that. There we go. There's the seller. So your short bias was right. So we found a bid. Let's see where the next bid is. Yes, I bought a little BTC down at 61, I believe it was. A little bit of a bid there. Let's see if there's any follow through buying. No, there's a seller right there. So the seller came in right there. Mark that and see if they continue to sell there, we'll rotate down. If we get above 28, 29, you could see rotation back up. Wait for it. Remember, there is inventory above us, so there will be sellers if you are long. Okay? Make sure that if you are long, make sure you sell into strength. So we went down, we found the bid just above 24. Took it all the way back up to 34, they sold into it. The top of the candles are where the sellers initiate and compete. I'd love a look below and fail of the overnight low, but it doesn't look like I'm going to get that. Maybe I will. Let's see. Maybe I'm jumping the gun too much. Too much coffee. No, not yet. So there are sellers up here at 34. Bids at 26. Let's see what the next couple of minutes do. If we can't get underneath 26 and 3/4, We will probably rotate up to, there we go, 34, 36, there. Seller where we thought, right? We marked it, the sellers are there. So on the backfill now, right, if you like getting long off the backfill, right, you want it to come down and see if it'll hold 33. I don't really like trading in the middle of the zone unless I'm really, really tuned in and dialed in, right? So if you're long 33, 34, I'd sell them at 37, 37 and a half, right? Get yourself flat as the market goes higher. Next stop, 41. Tagged it to the tick. Little backfill again. So the market did go down, found the bid, and then moved up off of it. So there's that move up. Your target is the close. So you're looking for 69.45 and 3/4. Yep. That white line's pretty good, eh? That seller at 40 is still there. We have to clean that out. Can you guys hear now? Okay, good. Sorry about that. All right. A little bit of chop here. And what did you say, Hex? If we're able to run the close, that will create some short covering, and we'll get back into that red zone. Hey, thanks, Jem. So now we're just kind of chopping back and forth. Once again, we're looking for the bid. Right? Remember, folks, you really want, in a market like this, you really want to trade only at the edges. Okay, because it is fairly choppy. And you don't want to, you just don't want to unduly throw away capital. So wait for your setup. This could be a huge look below and fail of 44 3/4. So 44 3/4, there's a seller. Okay? Thank you. Oh, the NFP is now Wednesday? Oh, okay. Thanks, Leslie. Good info. I did not know that. Are they there? Did you take them this morning? How about here? Ah, there they are, right there. All right, here we go. Right? If the buyers are desperate enough, we'll push over VWAP. So I would kind of wait till we clear 50 and 3/4. And check this out. There will be a seller here up at 54. So just remember, if we clear 50 and 3/4, be prepared to bail here if it stalls. But this will be your target 56 and 3/4. Now the price action is that slow, creepy price action. There we go. There's 50 and 3/4. Wait for it. Wait for it. There we go. It's a slow creep higher. Now I'm waiting for those 54 sellers to come in. Ah, there they are. Right? There they are. Right there. Right? On schedule. Let them clean that out and wait till we get back up over 50 again. See how it's clearing? It's clearing out the 54s. Make sure if you were long, put your sell orders out. Let the market take you out. See how it's stalling right there? We knew there would be a seller at 54, right? See, they're back again. I mean, really, folks, people who have been with me for a while, if I could show you where the sellers are going to be when you're long, is that something you'd be interested in? Because it's real simple. So say if I was long 51, 52, I I would have had to put orders here. I always like to front run. If this is my target, I'll put my sell orders before that target. So if I was long 50, I would have been out at 54, 55, right? That way you book profits in a choppy market. Especially since look at that move, right? At the top of the move, you're less likely to get that thrust up. That's why if you're buying up here, you got to take what you can get. Would I like to get 62? Hell yeah, if I was long 50, right? Nice work, X. Nice work, right? I might have been a little bit more intelligent and told you to buy it once it cleared VWAP, but I was being a little overcautious. It's Monday morning. And most of you guys are still nursing a Super Bowl hangover. There we go. On the move back up, next stop is 57 and a quarter. Let's see if we can hold the 54s. Come on. There we go. Right. So that was a large look below and fail. The look below and fail is a trade. Sometimes it happens in a minute. Sometimes it takes a while. But we look below, we failed. All the sell orders under 44 and 3/4 are complete. The market will rotate higher. Right? This is trading with common sense and in the business. Right? And hey, if I was long 50, 51, I would have been gone by 55. Right? I'll take the 4 points, 5 points, whatever I can get, book it. Right? It's always nice to get paid. Right? Now, If you want to hold trades longer, that's fine. Not a problem. But what is your thesis, right? And do you have the account to do it? And do you have the skill? So I like to teach you guys how to make money quickly. And then as you develop your skill and your bank account, you can hold trades longer using the same principles that you do for these quick trades. Does that make sense? I hope it does. So right now we got bids at 50 3/4. We've got a seller at 54. Not a big surprise. That'll put us, if we don't get back up over 56, that'll stifle the buying and people will start to sell and you'll look for VWAP. Because remember folks, this is a two-sided market, which means there is buying and selling. It's not just one way. It was one way on Friday. This is allowing the people who got short on Friday to come in and do some covering. So right here, I wouldn't touch it because it's not at an edge, right? And we've already had that move up to 56. There we go. Let's see if we can get up to 56 3/4 again. If we get enough order flow, if we get enough customers that come in and bid 50, 52, 53, 54, they'll raise the offers just like they just did there. Right? This is a little distribution. Yeah, it's tough trying to will price to your target. Hey, we've all done it, George, right? Let those who live in glass houses not throw stones. We've all done it, taken a trade and hope it goes, and then like, oh, come on, come on, come on. But that's a hard way to do business, right? It's hard to do business hoping and wishing, right? So we've got to, this is one of those businesses where you have to take what you can get. You know, if you're not making any money and someone comes up to you and says, oh boy, see there, I told you. See, I told you, if we couldn't clear those 56s, they're going to puke it. And that's sellers competing right down to VWAP, right? Now, let's see if that had brought in some buyers that we can take 57. Did you guys all see that? Now, if enough people got short under 50, see that seller's still there. Seller is still there, right? Be careful, right? When buyers are drying up, boom. What do I do? If I got 1,000,000 shares to sell, right? And I'm selling at $5, and I see it's thinning out, and I see a bid for 300,000 shares at $4.20, I'm going to hit that so fast it makes your head spin, right? And that's what those big red candles are. Now, once that order is completed, the market bounces back. But we have a pretty good seller at 56 3/4, 57. So what we're doing right now, folks, is the large traders are distributing what they bought under 44 between 50 and 56. Distribution means selling. Yeah, it's a big, and now the algos are so intelligent that they will sell very quickly. And this is why I don't like breakout trading, because I was trained to sell size into a breakout. Let's see what happens. Maybe we hold price sideways enough that attracts buyers, but I don't know. Let's see. Rotation to the lows would be good. Heck, if it's a two-sided market. See how the offer is moving lower? Sellers are competing. As soon as they find a big buyer, they'll lift the offer. This is business. As soon as you see that there are big buyers present, you will move the offer up. Right? When sellers need to get out of their product, they're going to lower price. That is why markets go down. Markets stop going down when those sellers see big bids. Right? Like on that big red candle, right down here, there were some big buy orders. It stopped and lifted. Here, same thing, 69.44. Right? So let's see if we go and we get under the close. I'll be looking for that 41 area. Give it some time. This is rotational trading at its best. What did I say? 41? We're at 42, 41 and 3/4. There's 41. Came close. We got close. Now remember, as we go back up, there's going to be trapped longs at 48, 47, 50. So just remember that. There they are. Right? If we break underneath 41, we'll be looking for 38. Why are you scared? What's scaring you, Hex? Are you not on the ball today? Uh, it's because where we took that stop, Moran. I'm just curious. You see this right here? There's a little position underneath. Yeah. Then only take the A plus setup. Yeah. And size down. Yeah, exactly. Good stuff, KK, right? You might be oversized. Yeah, that's another good thing. You make your points and switch to 1 micro, right? Look below and fail of 44. Let's see. Oh, damn, I missed it. I should have been long 46. 45, 46, selling into VWAP. Oops. He who hesitates. Welcome, Spam. Welcome to the room. If you have any trouble, just reach out and DM me anytime. Yeah, I should have been long 45. 45, 46, selling into these 48s. Yeah. Sellers are just underneath 50. Oh, nice to have you. Thank you for watching the podcast. Or listening to the podcast, I should say. Okay, Chop City here, folks. Maybe I think I'll wait till the next half-hour period opens in 2 minutes. Asia and London rejected above 50. You know what, Hex? I haven't really thought about that. I don't, you know how people, you know how they have the Asia session and the London session and, you know, people have different, I never really subscribe to that. I always just look at inventory as a whole. Now, I could be wrong, but I just find that, you know, what, how do I say this? The less that I need to worry about, the better. Right? So, are you looking to scalp Hex or are you looking for longer term trades? right? So here's the thing, Hex. Inventory is above us, right? All of that overnight inventory is above us, right? Also, I think if the more you think about these things, the more you might freak yourself out, right? That fear that you were talking about comes from trying to overanalyze the market and not getting what you think you're getting, right? Where if you can just kind of focus and stick, focus, 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 right? Watch the offer. Right? That way you can focus on what's just pure business, right? And that way you don't have to worry about the rest. See, unfortunately, folks, we are overwhelmed with information. Somebody's talking about an Asia session. Somebody's talking about this. Somebody's talking about gamma level. Someone's talking about something else. But none of them tell you how to use it and put it into a trade, right? Where do you put your buy? Where do you put your stop? Where do you look to get out of the trade, right? If you're shorting, where do you short? Where do you put your stop? Where do you cover? That's all you should be thinking about. You should not be thinking about anything else other than where is the inventory. If the inventory is above you, you're going to have supply, which means resistance. If the inventory is underneath you, we're going to take that inventory and go and sell it higher. So that's all you really need to know, right? This way you don't overcomplicate things and all you're focusing on, there's a nice, I was flapping my gums, a nice look below and fail, right? So you go long, you put your stop here, and you sell into that strength, right? So say you went long at 46, put your stop at 44, sell 50, you make 4 points, you're done, right? My rules are built on common sense, right? So you don't have to go really nitpicking every little detail, right? You know that there's a seller at 50. Why? Because they were here and they were here. So if you went long here, you'd be a fool not to sell it at 50. Because you know that there are sellers waiting there. And this is what candles should be showing you, right? Patterns and everything are great. And I'm not poo-pooing technical analysis. But how about we put some common sense into the chart? Because the chart's trying to tell you where the sellers are and where they stop selling. All you have to do is pay attention and focus. You gotta focus, right? If you can't focus, they'll get you, right? See? Once again, buying 46, yeah, put some orders out at 48, 49, get paid. Another look below and fail. So Hex, what's going on? We got a rotation, brother. Yeah, maybe cut out the distractions. Maybe cut out the distractions. I know if I'm trading and I'm looking at something else, oh, it's not good. Right? I've got to focus. I mean, I can make markets in 10 stocks simultaneously, right? And cook a meal, but and talk to people, but man alive. Retail trading, you need to focus retail trading because we don't control anything. The only thing that we control is our risk. Right, offer lifting, looking for 56 and 3/4. Lovely rotation right back up. Right, that worked nicely. I was expecting a seller at 50, so we've cleaned out the sellers at 50. Now let's see if we can clean out that 57 seller. So far, we were not able to take out that overnight low, ladies and gentlemen. And this is what our bird's eye view looks like. If we take out that A high, it's going to run some stops, and there they are. I'll be looking for 60 and 61 to the upside. See that little breakout? You can see the size traders selling into it, right? Looking for 62. Now we took out those two stops. And of course, Friday's high. Right, now we've got all bunch of stops up here. 68, 70, 77. Let's see. Can we hold 56 and 3/4? Sorry, folks. Right in an area of supply from the overnight, right? So you're going to expect a little bit of resistance, right? And the order flow is kind of slow, right? It's coming in slow. You got to let it develop, right? So say if you went long here at 58. You'd put your stop out of the bottom of the next candle here, right? And you'd probably get stopped out. See, I'm too early, right? Say, if I was long here, I would have been stopped out. So I should wait until they clean out the sellers that are here, right? I hate buying right at the top. I like a nice look below and fail, but I like the look below and fails at lower levels, right? You have a better chance of that move up. Here, we're right back to this area where it kind of stopped out. So here, if I took that trade again, let's go try that. Damn, I'm slow. If it holds 56 3/4, nah, it's not doing it. I'm not long yet. I'm hesitating. I'll let this candle go. It's slow enough that I could let that candle go. Let it develop. Let's see, halfway through the candle in 5 seconds. See, and there's still a seller here, right? Annoying, right? It's getting in the way. So this chop doesn't really instill confidence. So if I did buy that now, as there's 14 seconds left in this candle, say I bought 57 and a half, 57 3/4, I'd have to use that as my stop and I'd be flat because I don't like the way it's trading, right? Once again, long at the wrong time. There is a seller there, right? And that's okay. You take your lumps and you go on with it, right? So I bought 57 half, and as soon as it got down to 56, I was gone, right? It's okay to be wrong. Just admit you're wrong quickly, right? Admit you're wrong quickly. And sometimes you should be trading when you're not supposed to be trading, right? But this is a business where the longer that you don't take your stop, don't admit you're wrong and get out, the more expensive it's going to be. The quicker you admit you're wrong, just admit you're wrong and get out of the trade. Save your bullets for the next battle. I hope that makes sense. Right? You're not always going to be right in this business. Nothing wants to, like, now that I got stopped out, gotta be patient. My stop's always structural. Max Money, New York City. So when I took that trade, I kind of knew I kind of botched it, right? I was like, I pushed it. So as soon as it got underneath 56 3/4, I was gone, right? So my stops are always structural. So if I'm long here, usually my stop will be at the bottom of these candles, not these ones, right? So say I'm long here again, I'll use 56 as my out. If it's really choppy, I should know not to take the trade. My stop loss, I try and use as small a stop loss as possible. Stop loss are a business expense, right? They're insurance on your account and they also give you information. But that doesn't mean, it's like having a business and leaving the lights on, right? There, that's the trade I was looking for. See? I was too early. I should have waited. But that happens. Nice trade, Taco. Well done. See, I should have waited. See, and had I waited, because and this is something I always do, right? I'll take the trade too early, get stopped out, and if I'm not on the ball, I won't take it again, right? And that's the trade I wanted. I wanted 57 up to 60, 61. It happens, right? And everybody, this happens to everybody. So don't feel bad. It's just business. It's Monday morning. I had one killer trade this morning, right, on 80 minis, and it was beautiful. The client's happy. So these trades I'm doing with you guys, I'm scalping the micro. So, you make 50, $100, you lose 20 of it, kind of stop before you lose all your money, right? Looking for the Friday high at 69, 65. Is it a half? I think it's a half. Boom, there it is. Too early. I was too early. It happens all the time. Got to wait for Steve and Ray on that, Ronan. They're pretty busy with the AI and stuff like that. Not 88. 8. 1, 2, 3, 4, 5, 6, 7, 8. Not 80. It's in the room one. That was a nice little trade in my client account. Yeah. The trade was basically this one. It was earlier in the day when we went down here. I was long 24 up until that 36s. It worked nicely. Now let's see if we accept over Friday's high. Anyone who's using that as a stop is going to be forced to cover. And we'll be looking for 68 and 3/4 and then up to 70 and a half. Accepting over a previous day's high is going to force some short covering. That's what we're looking for here. Yeah, we might have breached it in Globex, but this is RTH. So, well, it doesn't. It's not that it doesn't matter, Ed. But remember, there's more participants around, right? Think about a store, right? There's nighttime and then daytime. Think about it, right? 9 o'clock is when the New York Stock Exchange, right? So there'll be more short covering. It's not that Globex doesn't matter, but anyone who was shorting in Globex will be using that high as a stop. That's why we get that move above it. You get what I mean? Does that make sense? Risk. Globex, you can push things a little further, Ed. So Friday's high, watch. See how look at the response that we just got. Do you see what I'm trying to teach you? Look at the response. We just came down here, found a bid and moved up. Do you understand? Because Friday's high is where we are right now, Ed. Once we get to the Globex high, then we'll look at that. Do you understand? And if you were short, here you would use Friday's high. You wouldn't use the Globex high because that's like 20 points higher. Does that make sense? Your risk would be crazy. Good. Right? So we use the reference where we are at the time. Like right now, we're in this neighborhood. Right? We're not in that neighborhood up there. When we get to that neighborhood, then that'll be relevant. But right here, what is relevant is that Friday high, and you just saw it in action. Right? Just as soon as we came down to 66, it found a bid, right? And it moved up. So you watch that Friday high to see if we stay above it, because that's the reference that we are closest to at this point in time. Hopefully that makes sense. And a lot of older traders and more senior traders tend to value RTH references more than Globex ones because they know Globex is all about the pushing of inventory as high as you can get rid of it. Yeah, that's what we're doing. We're trading on the edges, always on the edges. Now, if you're thinking of shorting, right? If you're short, say 65, 64, I would put my stop just a couple of, maybe a point or two above that high. And your warning level is now that high, right? See now, say if you were short 65 and you had a 66.5 stop, and it gets up to that Friday high, and it doesn't sell off, then you know that you're probably going to have to scratch that trade. Now, where would you put your bids? I'd put my bids down here at 62 and see if you can get a fill. If you can't get filled, that means nobody's selling it cheap. There you go. Right, shorting that Friday high, and then boom, there's your cover. That's nice for like 4 or 5 points, right? So, like I said, short, stop, put some buy orders in so when the market goes down, you get hit. Nice. Perfect. Right? That's textbook. Textbook. And if we really have to put it on sale, we'll come back down under 56 3/4. Finding bids at that 60 level. That's where you're looking to cover. And that's it for me today, folks. Thank you, everyone, for being with us for our morning session. Have a wonderful trading day. Please come join us at tradingsyndicate.org. If you want to learn how to do this, make some money, practical common sense, simplicity, right? Thank you, everyone. Appreciate you guys. Have a wonderful, wonderful day. And we'll see you all tomorrow. Good stuff, Hex. Way to go, brother. Well done. Just focus. The fear will melt. Have a wonderful trading day, and we will see you all tomorrow at 7:30 in the morning UK time, 2:30 in the morning New York time for those insomniacs. Thanks, everyone. Much appreciation. Bye for now.